Alright, welcome to today's trade analysis. So we'll just get straight into it. But I also kind of want to start a little bit of a series talking more about psychology, because I feel like recently, whenever I feel unmotivated, I just want to hear someone like talk to me, and I just want to hear someone motivate me and tell me to not quit. So I feel like I can be that person for you guys as well, because as I'm talking to myself, I might as well just record it and then speak to you guys as well. Anyway, so this is our daily order block right here that we're in right now. I know it's a bit messy, but this is our daily order block right here. I have this daily protected high right here. Right now on a daily, it's a downtrend, down, up, down, up, down, up, down. So right now, if we're following the trend, it should be down, up, retrace, and then continue downwards. If we go up above this high, then I'm turning bullish. But if we just stay below this high, then I'm going to stay bearish. There's nothing really much for me, to be honest, for the 4 hour and for the 1 hour. We just took out this liquidity. We're just inside this daily order block right here. For the 1 hour as well, there's really not much for me to see because during Asian session we were just kind of consolidating. We did create this fair value gap and respected it, but this didn't even close below this low, so this wasn't really something that I was looking at. So if you look at this as well, this not closing above that high is also kind of significant, which I'll show you right now. Because we failed to close above this high, this low now becomes a weak low. So this low now becomes a draw on liquidity for me. And because this high again failed to close above that high, this low now also becomes a weak low and also becomes a draw on liquidity for me. And also adding on the fact that this is Asian session lows, so this has a lot of liquidity right here. And we also have liquidity right here because this is Asian session highs. So as you guys can see right here, just looking at the kill zone and looking at liquidity, you can see we swept Asian session highs and then we went to take Asian session lows, which is the exact strategy that I do every single time. So I was taking a short somewhere around here after we swept Asian session highs, and I was targeting this low because this is weak and because this is weak. So the reason why I marked this is just to show you guys that these two are weak lows. If we go on to the 5 minute, you guys can see right here, this is here like around 2 a.m. This is London kill zone. We got that 5 minute fair value gap right here. Then we tapped into it with this candle right here. Then on the 1 minute, after we tapped into it, we respected it. We created a 1 minute market structure shift. We created this fair value gap. We tapped into it. So I entered here with the stops above this high and then targeting that Asian session low. So as you guys can see, I got used as liquidity and then I got stopped out just slightly before it went down. So if you guys see, it kind of seems like just an unfortunate trade, because even if you cover this order block right here, even if you just cover this order block right here, we still got stopped out, right? If you guys look at this, you have to think about what the trade idea was. So after the trade, I thought about what my actual trade thesis was. So my trade thesis is that if we sweep these Asian session highs and we get this fair value gap, then we will tap into that fair value gap and then we will retrace down and then it will come down here, right? We swept these highs, so then this high should not be violated. And this low is the one that I'm looking for. So now I have a direction, which is this low. I have something somewhere where it invalidates my trade, and now I just want to look for an entry. If I want to short, I could have just shorted here at the 5 minute fair value gap. So if I enter here, my stop should be here because this is where it actually invalidates my trade thesis, and then this is my draw on liquidity. So that will always be my target because my target is my draw on liquidity, and then my stop loss is where it invalidates my thesis. So if I did that, then that would have been fine, like this. That would have been fine. But the reason why I didn't do that was because I don't like entering on a 5 minute fair value gap, because if I enter on a 5 minute fair value gap, oftentimes it just disrespects it. I want to see it respect first and then enter. So if I go down to the 1 minute and I see, okay, after this 5 minute already disrespected and I enter, then I would be entering at around here, because this candle is the one that disrespected this candle was the one that respected this fair value gap, right? So if I was to enter after it respected, then I would be entering at this candle close right here, which is here. And my stops will be here, and my target will be here. While this is not a bad risk to reward, 1 to 5, if you guys do this exact strategy and you always just do this, it usually often just gives like a less than 1 to 1 risk to reward, which I don't really like. So what I usually do is just I wait for it to respect it. And while it respects, it usually creates some sort of 1 minute fair value gap, which it usually retraces into. So since it retraces into that, then I'll just enter into that place where it retraces off, and that will give me a better risk to reward. If it goes above this high, my trade thesis for thinking that the draw is here, and for thinking that place where it invalidates my trade is still here, it's still correct, you know what I mean? Like, this should still be the stop loss and this should still be the take profit, no matter where I enter, okay? Because that was my initial thesis. What I'm doing now is I've already determined a stop loss and I've already determined a take profit. So what I should be doing is just looking for an entry. Okay, this is all hindsight, by the way. So this is not what I was thinking during the trade. I have to be honest, because this is all just like lessons. So before I even enter a trade, I already have a stop loss and I already have a take profit, because that is part of my thesis. My thesis already gives me my stop loss and my take profit. If I go into the 1 minute and I use this as my take profit, does that change my thesis? No, because my thesis is still, this is the stop loss and this is the take profit. If I was to take an entry here and I put my stop loss here, then this means that I have now changed my thesis to this is my protected high, and I don't think that price can go up here. But there's no reason why price can't go up here, you know what I mean? Just because on the 1 minute, yeah, this is a protected high, because on the 1 minute, this is bearish, and on the 1 minute, we had a market structure shift, and we have this protected high. On the 1 minute, this is a protected high, yes. If I break past this, just like it did right here, does that invalidate my trade? No, because it still hasn't broken past this high. As long as it doesn't close above that high, as long as it doesn't break past this high, my trade should still be valid. So my stop loss should not actually be there. It should just stay here, because even though my entry is here, my thesis says that my stop loss is here. See, so then in hindsight, what happened was we ended up sweeping this liquidity and then we entered this 5 minute order block and then we went down. So does that make sense? Yeah, it does. So price didn't do anything that's weird. It just decided to go into an order block instead of just going into a fair value gap. Sometimes it just taps fair value gap and just goes. Sometimes it taps fair value gap and it goes into order block. And that is why it's so important to know what your thesis is and where your stop loss is. Because just because it taps into that order block doesn't mean that my thesis is not right. It taps into this order block. It is still trying to tap into that order block so that we can go lower. I was just too zoomed in into the 1 minute. I was just looking at the 1 minute and I was like, okay, we got this break of structure right here, we got this protected high right here, there we go, that's my stop loss. If we break past this protected high, if we close above this, then yeah, on the 1 minute we have changed our structure. On the 1 minute we have changed into bullish, right? If we break past this, but that still does not change the fact that we still haven't broke past that high. Even if it was to go down, go up, close above this, go up here, and then come down, that would still be fine. That's just that could still happen. It's still respecting that 5 minute order block, so it's still bearish. This is why I need to remind myself to just not be too zoomed in into the 1 minute and to just remember what my thesis is. At the start, my thesis should give me my stop loss and my take profit, and then in between I just find an entry. That's pretty much how I approach it. You guys can approach it however you guys want, but that's just how I do it, and that's just the reason why I ended up losing on this trade. And that's also why you should be very focused during your trading session. Although I don't mark out every single thing that I see, I didn't mark out that 5 minute order block, not because I didn't know it was there, but just because I didn't really care about it. Like, it doesn't really matter whether it touched it or not. I was more focused on the 5 minute fair value gap because that's what I use. But it doesn't mean that if it taps that 5 minute order block that it invalidates my trade. I just didn't mark it out there. But that's why you should also be very focused if you guys are not marking out everything like me, because I don't like to have too many things on my chart. It just gets messy. But that's why if you guys are especially like me, you guys want to be focused a bit more. And even if you were to mark out every single thing on your chart, you should still stay focused, because you don't want to be reacting to every single thing, right? Not every single level that price reacts off of matters, because a lot of the times if you're like too zoomed in on lower time frame, it's just noise. So today's trade should have been like this, something like that, covering that order block or covering that high. If you guys learned something out of this one, I think this is probably the most valuable video that I've ever done, because this is something where I actually genuinely just learned it myself. I have never heard anyone talk about this on YouTube, and it's not like something that I discovered or anything. It's just like something that I've learned, I guess, just like a lesson. If you guys like the idea, you guys can take it. If you guys don't like the idea, you guys can still use your idea. You guys can still use this 1 minute, because if you guys were to follow my idea, you will probably get a higher win rate, but at the same time your risk to reward will go lower. See, it's not always, you can put your stop loss above that 1 minute high if you want to. If you want to base your thesis on that 1 minute instead of basing your thesis on that 5 minute, that's totally fine. If you guys backtest it, you'll probably get higher risk to reward trades, but it will just hit less times. to, like, it doesn't really matter. It just depends on what your psychology allows for you. But if you guys want a higher win rate, or if you guys want a higher risk to reward, it doesn't really matter. So you guys just take what you want from this video, and I hope that it has helped you guys. Yeah, I'll see you guys in the next one.